Let's bring in some more perspective and discuss this in detail. Mayuresh Joshi, Fund Manager for Angel Broking, joining in as well. Mayuresh, morning. Thanks for taking the time out today. L&T, the way the stocks really played out, 36-37% lower on a one-year basis. Are we seeing some short covering here, or you believe the worst is now somewhere in the price?
Morning, Priyank. I think clearly if you go by the order flows were surprising in terms of what expectations were clearly laid out. But clearly I think quarter four is something where substantial amount of orders needs to be booked by the company to the tune of 62,000 odd crores to at least get to the threshold guidance levels that they've basically pointed out for us. Overall for the industry, I think the capex cycle still looks weak. You're probably looking at crude prices if they stay in this range. You're probably looking at the Middle Eastern orders probably coming in with a delayed effect, and what really happens with the hydrocarbons business to that tune. So clearly I think the margin compression that we're probably witnessing was largely factored in, but clearly I think one needs to understand that this is a play on how the capex cycle will pan out and what probably happens, as I said, on crude and hydrocarbons. Clearly in terms of the non-core assets, what happens with divestments thereof, whether it's their Infotech arm, in the real estate business as well, is something which will drive probably the kind of re-rating that one is really looking forward for the stock. In terms of core valuations, I think attractively priced. So I think if you take everything into context, the stock looks attractively priced at this point of time. So clearly I think though the valuations have become extremely cheap, I think the earnings probably have got cut down in terms of how the revenue guidance and their order flows are probably looking over the next few quarters.
Okay, take a look at Jyoti Structures. Just pull up that counter for you. On the back of Kalpataru and Amin looking to buy into the company, the stock is actually moving up quite nicely this morning. It's up about 8 to 9% at this point. So keep an eye on that one as well on the back of that deal news coming in. From the mid-cap pack, we're also seeing a lot of action on those aviation names, Mayuresh. All kinds of news and select counters as well. But overall, the entire pack is seeing strong traction after a brief cool-off last week. What's your call when it comes to some of those aviation counters?
Morning, I think clearly the move has been quite evident on all these stocks. So except Interglobe Aviation, where you've seen a sharp correction post their earnings call, you're probably looking at the ATF price reductions playing very positively on the margins of these companies. For instance, being SpiceJet, I think the last 3 to 4 quarters you're probably seeing the company come back into profitability. You're probably looking at market share gains happening for that company, new aircraft being ordered. So again, I think the kind of operating expenses that one really relates, I think with new aircraft coming in, I think it will be relatively lesser. You're probably looking at other income going up, the load factors staying at those higher levels. So clearly I think the moves are quite evident in terms of how the airline stocks have performed. But whether you'd be buying into that, I think it's really a very cyclical factor. So one really is not sure how the next 2 quarters for the airline companies will be, except for the ATF prices. I think if crude is expected to remain benign, you're probably expecting ATF prices to stay low, which aids their margins. But clearly I think it is a cyclical industry. So at least at this point of time, I think the moment has been too sharp. It's wait and watch, at least from our side, as far as the aviation pack is concerned.
All right, so that's as far as some of the counters from the aviation pack is concerned, as well as what we're seeing in terms of trade today. Grasim's up almost 4.6%, one of the top gainers. Lupin and Cipla also seeing some bit of gains. Pharma pack, Mayuresh, that's been in focus as well. Any thoughts here on some of these majors? If you've been tracking some developments on Lupin, Sun Pharma also has been another one that we're seeing some bit of developments regarding Gleevec again. And then you've got Aurobindo Pharma in the news flow again on those clarifications regarding the US FDA observations.
So respectively, Priyank, I think if you talk about Lupin, I think the plants that have probably got approved, I think not seeing any substantial financial application from that side. I think the Goa plant is extremely important for Lupin. So in that sense, I think the earnings of Lupin, the way they've panned out and the valuations that the company is currently deriving at, I think it's probably fair to say that it is trading at reasonable valuations. Specifically in terms of Aurobindo, I think the kind of observations that we're probably reading through the media reports, one really understands how critical the observations are specifically for Unit 7, because that contributes almost 50% of the pending ANDA approvals. And clearly I think the kind of pipeline that Aurobindo has got, it is impressive. I think you're talking about the injectables business, you're talking about the consolidated revenues coming both from Actavis, Natrol. I think those businesses are going to be very, very value accretive. However, I think one really needs to understand and read into these observations and how they've probably played out. Clearly, Sun Farm and the Gleevec approval that has come, I think the exclusivity expectations are quite high. One really expects an EPS addition of almost a rupee and a half to FY 17 earnings. And in our opinion, I think most of the negative news associated with the Ranbaxy integration, what probably happens with
All right, Mahesh, we seem to just got a little bit of weak connection there. We'll just try and reconnect, but in the meantime, pull up Just Dial for you as well. That stock's down 2.2, 2.3%. It's had a disaster last 2 to 3 months. If you look at the way the counter's been hammered, I believe on Thursday or Friday itself, you've seen the stock tank quite sharply. Pull up a 3-month chart for you. There you go. Take a look at that. 1 month, 29% lower on the stock, and on a 3-month basis as well, stocks down 25-26% is what we're seeing. It's had a terrible Jan in terms of the way the stocks played out, and take a look at that. From a 1-year basis, 61% lower is the kind of erosion that we've seen on the counter as far as Just Dial is concerned, is what we're tracking currently in regard to how this counter is really panning out. 1.5% lower in trade today as well, and as the alert is signifying, you just had the stock slip momentarily at least below the listing price as well, and it's trying to rebound from that. 1.2% lower nonetheless on Just Dial right now is what we're seeing currently. Mahesh, you've been tracking Just Dial and some of these other majors more related to the IT or the e-commerce space as well. You got Info Edge as well, another newsmaker today. Any thoughts on these two?
No, clearly, Priyanka, I think if we talk about Just Dial, I think probably they need to do some strategic turnarounds in terms of how their business outlook is going to look. Nothing wrong with the model per se, but clearly I think Search Plus, I think they need to come out fast in terms of how the strategy might be. I think they try to add sales force, but again, I think this has to be very, very strategically planned. So in my opinion, I think the high valuations that Just Dial was deriving, I think was not justifying, as I mentioned earlier, on the kind of earnings trajectory that the company was probably delivering. So clearly, I think it is close to its listing price again. So I think I'll be a little bit cautious on this counter in terms of how the numbers will pan out, at least for the next 2 to 3 quarters. And again, the management commentary thereof in terms of how the Search Plus engine is probably panning out.
Maybe we haven't discussed some of these banking names with you. Given the numbers that came out of the private sector space last week, what was your takeaway really, and what are you watching out for still? We're still watching out for a few more numbers. But what really is the kind of trajectory you're anticipating when it comes to performance of some of these banks, given the pressures that still remain?
No, clearly, I think the banks who've got a corporate exposure, I think they are going to remain under stress. I think very, very evident from what the ICICI Bank management mentioned, what the Axis Bank management mentioned. So the highly leveraged groups that one really talks about, I think the softness in terms of asset quality is expected to continue in the next quarter as well. Having said that, probably I think the retail-oriented banks, the larger private sector ones, that is, are looking quite nicely perched up in terms of how the CASA accretion has been, in terms of how the credit growth has panned out, specifically on the retail side. So clearly, I think our suggestion is to look at a bunch of these banks, and specifically the larger private sector ones. Yes Bank posted a stellar set of numbers. So clearly, I think our thesis is that Yes Bank, HDFC Bank, Axis Bank, and to a certain extent even ICICI Bank, I think the softness in numbers is expected to continue. But again, I think we expect the asset quality pressures to probably peak off in the next quarter or so. So clearly, I think this is the space that we're probably liking. The public sector space, the valuations are extremely compelling. Our own take is that you're not really sure in terms of how the restructured pipeline will look, what kind of slippages will probably take place, and the kind of exposure that these banks probably have towards steel, metal, real estate, gems, jewelry, and a lot of the commodity-driven SME industries. So clearly, I think the larger private sector space is something we'll look at, and again, a bunch of these stocks as part of your portfolio strategy.
All right, Mahesh, thanks for joining us this morning with a closer look at some of those counters. All right, let's take a very quick break. When we come back, Pradeep Shah will be joining us.